Good morning, good afternoon, good evening, whatever time it is, wherever you're watching. Welcome to Bridging the Gap, episode number 50.
50, man. 50. Wow, you getting old, aren't you?
No, I'm not.
All right, a good deal. Okay.
50.
Right.
It reminds me of that 50-piece Giannis put up in the finals. What are we talking
But
about?
who's the best of all times, though? Guy went to Carolina? You still believe in that?
I mean, he played in Chicago, though.
Okay, I got you. But the best of all times?
He wasn't the best in Carolina.
Okay, best of all times.
Is he even the best North Carolina player of all time?
In college, no.
Thank you.
No. But is he the best in the pros ever?
What made him the best?
But not
Chicago Bulls.
Okay.
Not North Carolina.
That's a yes, folks. That's a yes. But anyway, what we got today, dude?
I think we're talking about hedge fund investing, right?
I think you're right.
All right. You want to lead this one?
Hey, I'll lead it, man. Lead it. You know, I tell people this. When you talk about hedge funds, a lot of people know what mutual funds are, but hedge funds are basically the very same thing for wealthy people.
Okay.
You know, and the great thing about them is the fact that they're pooling money together, they're getting wealthy people to contribute, but they're using strategies to make money. And the word hedge really comes from how they try to hedge the bet, meaning that when they do some type of investment, they're playing both the upside and the downside. Now, I'll give an example quickly in the stock market. Right now, the market's crazy. So right now, even though Apple is a solid stock, they may be buying options in Apple because Apple's cheap now. But they also may be buying puts too. So that way, if Apple crashes and burns, buying the puts, ching ching. And if it explodes, because they bought calls, ching ching. So they're really good about hedging their investment, unlike a mutual fund in most cases. And the other good thing is they're always looking for off-market investments.
I got you.
Off-market.
So, you know, me being real estate, when I think of hedge fund, I always tie it to real estate.
Yeah.
Is it always tied to real estate?
It's not. You know. Okay. And first of all, you know, when I look about hedge funds and mutual funds, mutual funds are for the everyday person.
Right.
And they're basically only going to be in the stock market. They're going to be ETFs or mutual funds or stocks and maybe some options. The everyday person gets into those.
Okay.
But the hedge fund, you have to be what's called an accredited investor.
Gotcha.
Means that you at least have to have net worth of $1 million, not counting your house, and generally making $200,000 to $300,000. And that's the low end before they'll let you get in. But like I said before, they're looking for alternative investments. They're trying to give you a great return because as a millionaire, you're expecting more than the average person. So yeah, the investments are a little different.
Gotcha.
Okay.
Another question, I'm sorry, and this may be part of
you're fine,
lesson
man.
before. So with the average Joe investing in a mutual fund, traditional stock market, there's a max I can invest per year, right?
Well, actually, you're thinking in terms of maybe a regular IRA, Roth IRA, or SIP. But if you have just a non-retirement account,
like a TD Ameritrade account?
Well, TD Ameritrade, but when you select a TD Ameritrade account or anyone, you have to say, is this a retirement type of account? Which they have limits.
Right.
Or non-retirement, don't have a limit. So there are people out there now that have millions of dollars in their non-retirement account, and they could add another $1 million a year. So there's no limit to non-retirement.
Quick and dirty, what's the difference between a non-retirement and retirement account as far as like limits or rates?
Well, they always have given limits to retirement accounts.
Right.
Retirement account may be like a Roth account, or maybe a SIP IRA, a regular IRA, a 401k, etc.
Right.
All of those have annual limits you can put in.
Right.
However, non-retirement accounts, you can invest in the same thing basically, but you don't get a tax benefit. Sometimes in a retirement account, I'll get a deduction, e.g. with a regular IRA or a SIP IRA, or I'll get tax deferment like a 401k or 403b.
Gotcha.
But I still can invest in the apples. I can still do the options, the covered calls, the selling puts, the credit spreads, etc.
Okay.
But even going back to something you alluded to earlier, when you're dealing with a hedge fund, and what we're trying to do today is to get people thinking about what wealthy people do.
Yep.
And though you may not be there yet, why don't you follow their same concept?
Agreed.
And a few things are going to resonate well with you. There are about 7 things that hedge fund people normally invest in, about 7 major things.
Okay.
Number 1 is land.
Got it.
It is amazing the strategies that you're learning concerning the entitlement. They're all in that, and creating a development, because you're talking about being able to go in there and maybe spend, I'm going to say in your case, let's say $250,000, But that $250,000 could become what, $1 million.
I'll become way more.
So think about that. So these hedge funds have billions. So they may put in, I'm going to say 10 million. They know in a year's time that 10 million will put in all the road, the curbs, the gutter, and 10 million now becomes 30 million.
Yeah.
That's what they're looking for is hedge fund.
Gotcha.
Because see, they're talking about the average person by themselves can't do 10 million, 50 million, 100 million. But hedge funds with wealthy people coming in. So even though the average person today may not have that 10 million, what if you and I came together and we put together $250,000? Could we do land and make money like the big boys?
Yeah, you could.
And that's all we're saying today is, no, you may not be a accredited investor, but the same concepts they use with land. What about real estate? What are some ways in real estate on the big end you've taught us? The commercial end. What are some big things there?
Oh, you just buying like commercial buildings, apartments.
Okay.
Oh my goodness.
Yeah.
I mean, the hedge funds put funds together specifically to buy apartments.
That's
and
it.
The appreciation alone, don't even talk about the value add aspect of it or raising the NOI to increase the value as well. But I mean, you're going to get margins way larger than you could in the regular stock market.
And see, generally speaking, mutual funds aren't going to do that. They do it to a small degree, but a hedge fund would love to hear about a $250 million deal because they're going to charge rents. They're going to charge association dues. They're going to find a way to get their money. And they already had calculated appreciation on it.
Yep.
They may hold it for 2 years. It goes up 20%, on $1 billion. That's $200 million they have made, even though you, the individual, can't do that now. If you pool your money together and see what rich people are doing and have been doing, why can't you do it also?
Agreed.
Okay?
Yeah. Yeah.
Another thing, something called private equities.
Now, what exactly is that?
It's like, imagine, Facebook's been around about how long?
20 years?
Okay, let's call it 20 years. Facebook has been publicly traded, I'm going to say 14. That's an arbitrary number.
Yeah.
So for 6 years, it was a private company. So for 6 years, Zuckerberg and his team were sharing the vision. We're talking to people. We're trying to find capital to expand. That's when a hedge fund would get involved.
Gotcha.
They'd come in and they would buy shares of that stock on the front end, sort of like a VC would.
Yep.
But they would do that, and then once they went public, they might have made on $100 million. They now have made $1 billion.
Gotcha. That makes sense.
Yeah. And see, and I want to do a quick sidebar, Council. As you and I both know, these things sound complicated, but the key thing, like the hedge fund people have, is they have a team.
Mm-hmm.
They have a team. It's like us coming together. Of course, you're going to be the real estate dude. Isaiah may be the stock market dude. I may be the business dude. We would have people under us, and you would spend all day long trying to find real deals with land and real estate. You and your team. That's all you all know. You're scouring the world. You got all types of technology, all kinds of system. Isaiah's the stock market options guy, cryptocurrency. Him and his team all day long, that's all they're doing. They got all kinds of sophisticated analysis. They're talking to people. They're reviewing companies. I'm trying to find businesses. That's what hedge fund people have.
Gotcha.
Qualified teams.
Yeah.
And most of the time, the people who are researching, they're paid bonuses based on how much profits they create. So they're motivated.
Yeah, they are. That makes sense. So, do hedge funds invest in currencies? I think I've heard that before.
Brother, you got it, man. In currencies.
Okay.
See, I don't know all about that currency stuff, but they have a team of people that all they do is currencies.
Gotcha.
I mean, they're all over the yen, the win, the sin, whatever it may be. But they're hedging the market. And again, though, because they're a hedge fund, let's say, and I don't even know it. Let's say whatever the coinage is in China versus Hong Kong. Okay. Mm-hmm. They may know those two are inverse. So they may take a strong position in this one, an adverse position in this one, knowing that if things go bad, they're going to swap, but they still have made money. They're hedging their position.
Makes sense.
And again, that's why it's important financial literacy. We talk about educational stacking.
Yep.
You must have a formal education. You must have an informal. You have to read. YouTube over the last 4 years has become my best friend. I have learned so much from YouTube. There's some bad stuff, but I mean, there's some good, even the entitlement piece. Once you shared that, I went to YouTube and I sort of connected the dots a little better. Then I came back with better questions. So you got to have the formal, the informal, and you got to have the kingdom education. Find biblical principles that are practical. Find the patterns that you see and do what Solomon did. Wisdom, he got wealth.
Yep. So what's another one? You said 7. I think we hit 5, maybe 4.
The commodities, gas, oil, precious metal. Okay. Again, I'm not a big economist, but what I'm understanding is during inflationary times, gold and silver is doing well. And we're in inflationary times now. So again, that's how they hedge their bets. They're in commodities. And again, they just don't have somebody with a CPA, MBA doing it, somebody who understands, because Proverbs says, in all getting, you must get understanding. These people who understand this. And even though we could find 5, 7 hungry friends who may not have degrees, may not have all the expertise, but if they're willing to learn these things, you and your friends could do this and make some crazy money.
Agreed.
Collectibles. They tell me, I bought my wife something for for Mother's Day. And the lady told me, this is a collectible. I'm like, okay, yes, ma'am, just give it that. But my whole point is, though, they're into collectibles, whether it be arts, cars, pictures. What are those new things? In something?
NFTs.
Yeah. And I'm assuming that might become a collectible. I don't know. I see some crazy stuff. I don't know enough about it. But those are the kind of things they're looking for. You know, again, I go back to Proverbs. It says that a wise man is open to new ideas. In fact, he's looking for them. Hedge funds do it. Mutual funds don't even think about doing it.
Gotcha.
And the last thing, my friend, is one we've talked about before. They call it private debt.
Okay.
They will find companies who are about to explode, but there's a problem.
Cash flow?
And it's money. A banker's like saying your numbers aren't right. They would have their business specialists go in there and analyze their business and go, thumbs up. They need to borrow $100 million. We'll do it. It's going to be at 20% though. And the company has worked the numbers and go 20%. The way we're going to grow, not a problem. We'll pay you. Think about it. 20% on $100 million, and you have leveraged this company. Let's say that's worth $500 million. So if the company crashes and burns, or they don't do well, you take the company and you sell it.
Right.
That's how they hedge. So what we talk about becoming the bank, they call it private debt. I love it, man.
Gotcha.
So in a nutshell, here we go. I want people to think about doing this yourself. It's a task, and sure, there's going to be some, and you could have a partnership that you call a hedge fund. You could have a C Corp that you call it a hedge fund. And of course, there may be some basic regulation, but the whole point is it's not that complicated.
Gotcha.
And see, you get like-minded people together who may have self-directed IRA monies, who may have money in savings, in their 401k. Some may even tap the equity in their home, if that makes sense. Some maybe that are selling their primary house, getting that money tax-free, may take $200,000 and put in here. Some may close a deal that you're teaching us how to do. But I really believe that if you're really serious, you probably have 10 friends that within 6 months, I'm gonna say a year, could bring up to $1 million. Think about it. 10 friends get $1 million in 1 year. And if you're willing to commit to the learning, and everybody finds their expertise, everybody finds their passion, everybody's willing to put in, like I'm in grad school, I'm getting my PhD, learning at that level, both the formal, the informal, and the kingdom education, you can change your generation.
Agreed, man. That's some good stuff. Hedge fund investing. Well, that wraps up episode 50 on hedge fund investing. I'm your host, Councilor Glenn.
And then William V. Thompson.
See you on the next one.
Sounds good.